How does the Fed funds rate affect gold? And just in case you're wondering what I think about gold,
I love gold.
people need to understand because there's about to be a move because gold traders have been bidding up the gold price lately. And why? Because they believe the Fed's about to pivot. They're about to lower rates. You can let me know down below if you believe they're going to lower or raise, but let's dive in real quick to what the mainstream media says about this phenomenon. It says right here, and this is just a Google search out of CBS News, frequently when rates increase, gold generally increases in value. And when the Fed reduces rates, the price of gold tends to stagnate or decline. Well, it's really easy to explain this. You see, when interest rates go up, when they're higher, people like to use their money to get interest back, right? They want to get as much yield as they can. When interest rates are low, they go, well, what am I going to do? Am I going to buy gold? Am I going to wait? They're doing this. This is really easy to figure out. See, when interest rates are low, generally, it means the Federal Reserve and the government is in a bad position, a pickle. And what they're doing is they're lowering rates to try and spur lending, spur growth, and along with that comes a lot of spending money recklessly. So what happens is people usually tend during those lower rate cycle times to go into gold as a safe haven. Gold for decades and centuries have been looked at as a safe haven asset. It's always good, in my opinion, not financial advice, to always have a little bit of gold. There was a day when financial advisors actually advised their clients to hold 10% of their net worth in gold because they knew about something that I'm about to show you right down below. Let's check this out. We're going to show you this. Gold in the USD price versus the federal funds rates. Now, this chart goes right back here to 1971. Now, in 1971, the American people had no idea what was coming before them in the next decade, and that was a decade of rising inflation. And what you could see is through this decade, you could see the federal funds chart with the interest going up and going down through that year because there was a lot of wishy-washy movements. And you could see as the decade ended, you could see that gold started to rise very nicely. Now, when you come down here, it shows you the gold price, and we'll back it up a little bit. Starting in 1977, gold at 160 ended the decade at $667, give or take a couple bucks. The reason why gold was going up was because inflation was running rampant. And the government and the people were also looking at the Federal Reserve going, you got to do something about this. And do something they did. See, as gold was going up in value and inflation was running hot and gold traders were diving into that market because they said, hey, things aren't good as the inflation rate keeps going higher and as people have less and less money because they only get so much in their paycheck and now it's going out towards higher gasoline prices, higher food prices. Things are going to be bad and the system is going to break. So what you could see is this. At first, the Fed funds rate took a deep dive in 1980. Now to explain that, let's dive, well, we can't because that chart doesn't start there. Not a lot of charts tell this story. But you could see this massive swing up in interest rates. Well, when interest rates went skyrocketing up, the Fed funds rate, so did credit card interest rates, home mortgages, car loans, everything, right? And it slowed the economy down. But it also tampered inflation. Well, at the same time, if you look as these Fed rate funds going from right here, 7.25% down to 4.5%, up to 9.45 or 9.5, down to 3.71, up to 8.73, you could see the Fed didn't know which way was up. They were like, did we fix it? Did we break it? Did we fix it? Did we break it? And you could see the gold price, though, was trending down off of its highs from $669, and it starts to trend lower. Why? Because as rates went up, people would go and buy government bonds. They would have their money in money market accounts or high-yielding savings accounts instead of gold. Well, now, as history shows us, throughout times of right here, high Fed funds rates, we would see lower gold prices until some trouble arose, like the savings and loan scandal and the day the stock market crashed. In 1987, gold would trend up, but then as interest rates went up, you'd see gold trend down. And it's really interesting because gold always follows what the Fed is doing currently, or gold can also tell you what's coming next. And we're about to get to that. So now you could see in the 1990s and the early 2000s, gold was sitting down really low, right? Just sitting down, not really doing anything, very boring. Until around 2001, things started to change. Things started to tick up. Why is that? Because for a multi-year period, the federal funds rate dove down after the dot-com crash. So as the Fed rates were going down, and look at into negative real funds rate, negative numbers, we saw gold climb and climb and climb and climb. Now, gold kept climbing even as the Federal Reserve rose rates this time. And why? Because it was too little too late, and all the gold traders knew it. You see, as the Fed funds rate was rising up, gold traders saw an overheated stock market, an overheated housing market. They saw a lot of jobs that were being created that were now being taken away, so they kept diving into gold. And then this is where it took a real dramatic turn. In 2007 is when the Federal Reserve started to drastically lower rates because the housing bubble had burst. Along with that, the stock market had come down. The Dow Jones lost almost 50% of its value in just a mere year and a half, 2 years. As that was happening, you see a crossover as the Fed funds rate was going down into negative terms. The gold price was just now hitting highs at that point, all-time highs. They came down along with the stock market correction because gold traders got spooked and the paper price of gold sold off, because as the stock market was selling off, as housing was falling, people were selling their gold positions, especially Wall Street hedge funds were selling their security, their insurance, to be able to pay back margin calls. But it didn't take long for gold to start a meteoric multi-year rise up to an all-time high of around $1,819. Now, there is different numbers that are floating around then because there are a couple different exchanges. But let's just say for this right now, we're at 1,800. Now, as gold hit these highs, they're not always there. It sold off again. Gold starts coming down as the federal funds rate was still negative. Gold comes down because the economy was stabilizing. What the government and the Federal Reserve had supposedly done was great. And so gold traders went into this sort of hibernation again, where gold sat in a low of around $1,000 and it sat around a median price of $1,300, $1,400 until, check this out, September of 2018. What was happening in September of 2018? Well, it was really important. See, the Federal Reserve started to raise rates. Right here, you can see it, where they just started to kick rates up a little higher. And that was putting pressure on the economy. Even though it was a very small, historically speaking, rise in the rates, gold traders started to bid up the price. And this is what's very interesting. This right here, this part right here has never, ever, ever happened since, this doesn't even happen since going back to the Great Depression. And that is Fed funds rates dropped. And we're talking about Fed funds rates dropping into negative territory. We're looking at right now gold being bid up. And look at this, even during the last 2 years, this meteoric rise on a percentage basis where the Feds took this up positive. Look at where we're sitting at now with gold. Gold, since the 1971, has never been set up for a time like we're seeing right now, where even when the Fed raises rates, how strong the gold price is. We're at all-time highs right now. Look, only the future is going to tell what's about to happen. But I invest in gold because I am investing in against the uncertainty of what's going on in the markets. Let me know down below what you think about it. But I believe that this is a great time to own gold. Now, of course, not putting all of your money into one basket, but to have a certain percentage of one's wealth in gold, I think is a great opportunity. Hope you guys got something out of this. I thank you so much for watching. So I guess with that, let's put this one to bed. See you guys.